Good afternoon and welcome to today's session hosted by Control Risks. Today our topic is navigating the risk landscape of ICT investment in Africa, a view from the continent. Control Risks is a specialist risk consultancy that helps create secure, compliant and resilient organizations. With over 45 years of experience advising thousands of clients globally, Control Risks is truly a market leader. They're experts across 34 offices around the world, bringing experience in international security management, threat intelligence, risk monitoring, crisis management, prosecution and law enforcement, business intelligence, data science, technology, and cybersecurity. Now, before I hand over to Basani, who's going to introduce the speakers for today and tell you a little bit more about what you can expect in today's session, please remember to stay with us for the full session to get your 1.5 CPD points for the day. And then we'd like to make this session interactive. So please feel free to ask a question for our speakers. You can type it in the Q&A. Alternatively, feel free to raise your hand and you can ask your questions live. Otherwise, if you have any questions after the event, I'm sure our speakers will be happy to answer them for you. So please feel free to email me and I can put you in touch with Control Risks. So you can email me at events@savca.co.za. And from there, I would like to hand over to Basani to kick us off for today's session. Over to you.
Thank you very much, and good afternoon to everyone. My name is Basani Moemajobo. I am Control Risk Director for our Business Intelligence Practice in Sub-Saharan Africa, and I'm based here in Johannesburg. What I want to do, first of all, before I introduce my colleagues, is to discuss briefly some of the key issues that bring us to have our conversation today. The ICT sector has become a very significant part of the work that Control Risks has done. In the last 5 years, we've seen an exponential growth in the amount of ICT transactions our clients are engaged in. There's a substantial interest in the sector, and this should come as no surprise. While ICT has been one of the driving forces behind the accelerated development of a number of African economies, the rate of population and GDP growth in these and other markets across the continent has not been matched by the supply of technological infrastructure necessary to sustain this growth. So with an estimated funding gap of $3 billion a year, there's significant opportunities for investors to enter into this sector. Now, it's quite clear that governments are investing significantly into the area, but the infrastructure needs are such that they cannot meet the increasing demands alone. Multinational and private equity investment in several aspects of the ICT ecosphere are therefore playing an increasingly powerful role in changing Africa's economic and employment landscape. Investment in data centers, fiber networks, towers, software, and wireless networks is having a transformative impact on Africa's business climate and will stimulate innovation in next-gen technologies such as 5G, cloud, Internet of Things, and artificial intelligence. Now, there's little wonder that headlines celebrating the investments in the ICT sector are becoming more and more common. We've seen recent examples of this right here in Africa by CDC Group, for example, which recently committed to a just under $51 million investment into the African ICT sector, which would be focused on infrastructure development and providing rural and underserved communities with access to affordable mobile connectivity. And this illustrates how the private market investors are banking on the significant value creation that the ICT sector represents. The expansion of digital connectivity to people living in remote villages and settlements will improve access to information and facilitate inclusive development that will have generational impact for such communities. In 2020, investments in technology-enabled companies accounted for about 55% of the total deal volume recorded in Africa, according to AVCA's 2020 annual private equity data tracker. $6.5 billion in total value of PE and VC investments was directed to the technology sector between the years of 2015 and 2020. So quite a significant amount of activity in that space. ICT, as I said, represents great opportunities for value creation and enables improved efficiencies in performing tasks, allows for decentralized work, and gives firms in remote locations opportunities to involve themselves in the global value chains. And of special relevance to Africa is that also, in Africa, is that ICT also compensates to a degree for the lack of other infrastructure in Africa. So with that said, I just want to then introduce my colleagues, or rather let them have the opportunity to introduce themselves. And perhaps I could start with my colleague Marissa to tell us a bit about what she does and the work that she's involved in the ICT space. Over to you, Marissa.
Great, thank you very much, Basani. So I'm an analyst with Control Risks, and my main focus is on political, operational, and security risk in Africa. I focus mainly on Southern African markets, but again, looking across the whole continent. Most of my work, is involved in advising clients in, your mining, manufacturing sectors, the ICT sector, of course, hospitality, really a broad range of business environments.
And we can go around the table. Catherine, do you mind going next?
I'm happy to, Basani, thank you. So my name's Catherine Fletcher. I'm a director and I lead Control Risk's social risk and compliance team based out of Johannesburg, and my team focuses primarily on the Middle East and Africa projects. We work, as Marissa does, across a whole range of sectors, but we do have clients in the ICT space who have particular risks and concerns in the Middle East and Africa.
And Sean, if you could close us off then.
Right, happy to. Thank you, Basani. So my name's Sean Duffy. I'm a senior consultant in the business intelligence sector here with Control Risk, based in Cape Town, South Africa. I'm responsible for due diligence investigations, asset tracing, litigation support, and basically helping out clients, a lot of private equity clients, a lot of clients in ICT, and I mean, as Catherine and Marissa said, a lot of other sectors, where if they do have issues and they need to have more clarity or more certainty on an issue, that's where we step in and use our analysts and our network around the continent to get more clarity for the clients.
Great, excellent, Sean. Now, of course, I want to ask each of you what you think is driving the high degree of activity that we're seeing in the ICT space. But I thought I'd just start off with a quick poll to our attendees. You should be seeing something on your screen shortly. There you go. And essentially, my question to you is as follows. Now, we've seen the deal volumes and values grow dramatically, particularly between 2014 and 19. Much of this continues to be directed to the most attractive markets, which tend to be South Africa, Kenya, Nigeria, and Egypt. So it'd be interesting to know from you, the attendees, together, what percentage of ICT funding do you think these 4 countries account for? And in fact, if the panelists could also chip in, that would be great. Let's just give everyone a minute.
Can I take a stab at this one?
Yes, Marissa, thank you very much. What do you think?
So I want to say C, 64%.
That is the correct answer. So that's great, and you're absolutely right. We see quite a significant amount of activity. More than 50% that's directed at these 4 countries. So Marissa, as you are the winner of the poll, I'll give it to you then to tell us your thoughts about what you think is driving the significant amounts of investment in the ICT space.
Sure, thank you. It's things like rising internet penetration. Across the region, you've got youthful and growing populations. You've got the need for improved access to financial services, healthcare, education, energy. All of these factors are behind the growth of African tech startups. And, we can look at some of the figures and say, well, Africa accounts for almost half of the global population that's not covered by, for example, a mobile broadband network. But what does that mean? Well, it means that developing the sector further is definitely going to be a challenge. There's no denying that. And it also means that some countries, of course, across a very vast region, it means that some of these are a lot more ahead than others. But what it also means is that there is a lot of opportunity for companies to tap into what's really an underserved market. And what we've really seen at Control Risks is that companies are starting to recognize this. Like, you know, between 2015 and 2020, the growth of African tech startups was 6 times faster than the global average, 6 times, which I really think is just such a good indication of how kind of rapid the growth of the sector has been, and just really how much appetite there actually is for investment on the part of, you know, major global corporations that really, you know, have big investments to make.
Yeah, I think it, Pisani, like just said, I mean, I agree with what Marissa said. I think there's a lot of opportunity in the African ICT sector because of the large young population, a very tech-savvy population as well. I think as well, there are a lot of areas around the continent that there's a lack of infrastructure than compared to a lot of more developed countries. I think this is actually can be seen as an advantage in a lot of ways because they're not stuck with the kind of the traditional ways of commerce or connectivity or markets. There's a real opportunity for entrepreneurs, especially in tech, to come out and disrupt the market. I think a very good example of this is Google's recent announcement of the $1 billion investment over 5 years. It's really indicative of what I think big tech companies are seeing on the continent. You know, we see it with Twitter and Facebook, and there's a real push towards the continent. I mean, as far as Google, I think as well, like that investment, some of it will be going to backing young tech entrepreneurs and startups. But a big part of that is money is going to laying a new subsea cable, which is going to connect Europe with Nigeria, Namibia, and South Africa, help to increase internet access and internet speeds. And I think there's quite a large demand, obviously, for high-speed internet across the continent, which helps open up opportunities for investment as well. And I think a very good example of this is fiber internet installation. I think most of us are from South Africa. We probably remember in 2019, 2020, the huge push there was across the country of laying fiber cable and trying to get fiber to the home. And I think that there's a huge push, then a huge opportunity investment for the last mile, the fiber to the home or fiber to the antenna. And I think we saw in 2020 was Octotel, which was one of the leaders, had I think it was $140 million investment from Active. So there's a huge opportunity, and I think we can definitely expect a lot more investments in this space.
I do just want to kind of jump in and say that, you know, we've started off on a super positive note. Like Pisani, you gave a bunch of great examples. I spoke about all of these positive fundamentals, and, you know, Sean, you've spoken about all of this investment as well. But, you know, we know that it's not that simple, and that as much as there are all of these opportunities, there's also a broad range of risks, you know, really broad and varied risks in that ICT space in sub-Saharan Africa that investors really need to be careful about. You know, political will to support the ICT sector and then good fundamentals don't mean that there are no risks. And of course, we are very much aware of that.
Yeah, I'm going to jump in on this one as well, Pisani. I hate to be the voice of doom and gloom, but we have to balance some of these great positive stories with some of the realities on the ground that our clients are certainly experiencing. And I'm going to categorize that into 3 different kind of buckets of risk, if you like. Physical security risks is well up there at the top. If you've got infrastructure that's being developed, or if you've got ongoing operations, then they can be at risk from everything from sort of petty theft by local communities even, or even employees, through to organized criminal damage and even violence towards your employees. And you just have to look at the unrest here in South Africa in July, which affected 40,000 businesses. And those knock-on effects are big. I mean, the number of company insolvencies that have happened as a result of that unrest has increased by 130% based on the previous year. So significant impacts there. Then we have cyber threats and the risks coming in the cyber world. So for example, industrial control systems, we're seeing increasingly that they're being targeted by hacktivists. We're also seeing espionage-driven cyber attacks and state-sponsored cyber terrorism as well, if you like. And again, to put a statistic against that, in 2020, 17% of the global ransomware attacks were targeted at the manufacturing sector. Finally, on sort of a theme that's close to my heart is social risks. So we now have to think about human rights in the online civic space. And we've even seen quite recently governments restricting people's access to the internet and to social media. So for example, during the presidential and parliamentary elections in August, the Zambian government restricted access to social media platforms such as Twitter and messaging apps such as WhatsApp. Now, in September, we have next year, we have the Kenyan elections, and the government has already promised that they will not allow sort of interrupted access during that time, but it remains to be seen. So there's a lot going on out there.
Clearly, Catherine, you've touched on some really interesting risks, as far as you can see them manifesting for some of your clients. And I think it's probably fair to say that we all, evaluate risks differently. And I'd actually be very interested to, get a view from some of our attendees. Perhaps if you could use the chat function, the Q&A function we have, and perhaps comment on what challenges you've experienced in executing, ICT related transactions in Africa. It'd be very good to get a view from the ground from, from individuals like yourself who are actively involved in some of these, major transactions. But let me come back to our panelists, because I do think that, it's important that, we get a really broad view of, how some of these risks are manifesting. And, Marissa, I'd like to turn to you. Just picking up from, what Catherine has commented on, it'd be great to get your view of, what you see as some of the key risks that are, manifesting on the ground for your clients.
Sure. So I think Catherine raised a really, really good example there on your last point with the Zambia election about social risks, which is actually something we've looked at extensively for our clients in Zambia or with interest in Zambia or looking to enter the market. And Zambia is actually a really interesting case because the previous administration, which was led by former President Lungu, in its very last days, it published quite a draconian piece of legislation, which was called the Cybersecurity and Cybercrimes Act of 2021, which, really just to sort of put it broadly, is kind of seen as quite a large threat to freedom of expression. And this goes for your kind of traditional media outlets, but it also impacts things like social media and other channels like WhatsApp, where information is disseminated. And I think that when we look at the case of Zambia, it kind of can serve as a sort of warning for investors to trade carefully in countries where regimes might be a little bit more authoritarian. So another one that kind of comes to mind when we're looking at elections and media restrictions is Tanzania. It had a general election in October last year, and during that time, the ruling party faced accusations that it had limited text messaging services to limit the reach of opposition parties. Another one that comes to mind is Ethiopia. Ethiopia has implemented media blackouts on and off since 2015, typically when civil unrest kind of heightens the country. So I think, when we're looking at these countries or, these type of regimes, there might be additional risks to working with state regulators. And of course, it's going to differ from country to country, but it's really important to be aware of, when the state has quite a tight hold on the environment, they might be reluctant to work too closely with private investors, or it might just be a very difficult environment to sort of do business in. But another one I think worth highlighting, and one that does come up quite often, when we sort of do our kind of client work and our bespoke kind of requests, are just looking at how much operational challenges are really going to impede a client's operations. So, we've mentioned already, I think, Sean, you mentioned it, that many countries lack the necessary supporting infrastructure. And I think one that is really kind of a big impediment to the ICT sector is really not having adequate power. And, of course, there's other things like transport or maybe a lack of a more developed financial services sector. But, with just like looking at power and the upfront cost that needs to be put into that in the form of getting generators, or else companies, must expect losses in productivity. And I mean, if we're looking at the whole region, even South Africa, which is the most developed country, even South Africa faces power outages that, really impact the bottom line of companies.
Yeah, can I,
Sure,
again,
what do you think?
Agree. I think in addition to the operational and the social risk, like Marissa was saying, and where we do a lot of work in integrity risk, and when you're looking at investing in a project, be it ICT or otherwise, you have to think, who are we investing in? And then when you think about that, a bunch of other questions come up, like who are the actual owners? How did they get the licenses to operate? And where did that initial money come from? And all these are really important questions. On one part, it's important for a compliant to be compliant with anti-bribery, anti-corruption laws. But the other major issue is, of course, reputation and integrity. And I think for private equity firms, to survive, they need to be able to raise funds. And your funding is dependent on your reputation in the market, not only on how good is your return on investment for your funds, but also on your integrity and your ethics. As an example, and I think most South Africans should know it, if you didn't ask those questions I had said before, and it's maybe 10 years ago, you decided to invest in a company called Sahara Computers, which was part of the Gupta Empire, and which were actually very strong growth long before the idea of state capture became, very used nomenclature in South Africa. If you would have invested in that and not done your research and not done your homework, your integrity and your reputation would be ruined. No one would be investing in you. So I think even before you get to operations, there's a lot of challenges, a lot of questions that investors need to ask to make sure they invest in the right company, make sure that they're able to provide that good return on investment, but also keep their reputation intact.
Yeah, I think you make really good points there, Sean. I want to move on quickly. We've got some interesting questions, but I'm thinking maybe we could save them until the end. Some questions have been raised around some of the, the difference between real and perceived risks in investing in Africa from an international perspective, and also a question around some of the gray areas of regulation and policy. I think we can come back to these because there are some areas that I think touch upon some of these questions that we can come back to. So it'll be interesting to know then, just moving forward, we've seen this, we know that it's impossible to consider like myriad investment opportunities on the continent without having consideration of how governments can, whether on purpose or inadvertently, create systems that either frustrate investments or they aid it. And it's essentially, the political landscape in these countries which, can facilitate the investment opportunities, or make them that much more difficult. And, all these things come into play when considering the broader business environment and, what to expect and how it's evolving. I would be interested to find out from you, Marissa, how do you think this is playing out, in terms of like the political systems that you see and the kind of business environments that they create?
You're absolutely right. That this is a very important factor in terms of how we're going to see the growth of ICT sectors. And again, of course, it differs from country to country. But I think to highlight here is how opportunities in ICT are not just there for companies, they're also there for economies. And what's really positive is that because of the importance of the ICT sector to overall economic growth, this is also now driving improved political support for ICT sectors. So I think one really good example is Nigeria. So we've seen the growth of the ICT sector there become a significant source of economic growth for the country in recent years. And of course, that's been really important for it because Nigeria relies on oil for revenue, and it's really battled in recent years with the ongoing commodities price slump. And of course, the COVID-19 pandemic, really put a lot of pressure on it throughout 2020 when the oil price dropped even lower. And what this has meant is that the Nigerian government has now really paid attention to the potential of the ICT sector and how the growth of that sector can actually support the broader economy. And while the COVID-19 pandemic was really difficult for the country, as for many other countries across the globe, what it's done in Nigeria is that it's actually served to heighten the sense of urgency that the government has about the need for enhanced ICT capacity in the country. So in Nigeria, we're hopefully going to see an improved business environment in the coming years there. And if we're thinking about how will this look, it's basically, to sort of sum it up briefly, it's more comprehensive policy and legislation that will come in. And, just not just looking at Nigeria, I believe a lot of other countries will join in. One other example no, actually there's two other examples, I think. So South Africa first has pretty good legislation already, although there needs to be better coordination and implementation among the various kind of state entities that are behind the sector. Kenya is also another one to watch because the government there is really keen to harness the potential of the ICT sector to drive economic growth as well. And none of this means, again, I'm sounding really positive. Now, none of this means that the legislation is immediately going to be concise and that it's just going to pave the way for easy investment. But importantly, and the reason why I'm highlighting this, it means that reform is likely within the ICT sectors in these countries, and that governments will look then to improve their overall business environments, not just in ICT, but more broadly, in a much more tangible manner than we've seen. It also means that for investors, it's really important to keep up to date with all the relevant legislation and all of the kind of regulatory changes that are likely to come up, because these could kind of impact an investment, and we really kind of expect a lot of kind of regulation to come into effect and impact businesses in this sector.
Interesting. Could you maybe expand a bit more on some of that non-ICT specific regulation that you think might have an impact on how investors look at some of these opportunities?
Well, I think if we look at South Africa, for example, and I think I mentioned this already, the power sector is really a massive impediment to business, and of course in the ICT sector, it can result in productivity losses or increased costs through the use of generators. And South Africa's power issues are going to remain, for the coming years. But I think in the past few months, we've really seen the most kind of action we've seen for more than a decade into actually securing a much more stable power supply. So for the first time, we've seen the government actually move forward with a much more realistic plan to harness nuclear power. Of course, a very controversial topic in South Africa, but it's been scaled down substantially. There's a lot more opportunities for private investment to participate to help the state. We've also seen much more concrete plans for renewable energy coming forward, and we've seen actually the private sector come on board and agree to develop renewable energy within the country. Another thing is that the government is allowing increased private power generation, and then any power that's not used can actually be sold back to the grid. And, this is a lot that's kind of happened in the space of 3 months, considering, that these problems are really long standing. But I think what it shows is the government kind of taking more seriously the need to create a much more helpful business environment for investors, because essentially, not even just in ICT, but all sectors of the economy are affected when you don't have a more stable power supply.
Yeah, no, that's very interesting. Catherine, what from your point of view, what comes to mind as some of the issues from a regulatory perspective? I think that your clients are kind of having to navigate and think about when they're making these investments into the ICT space.
Yeah, it's a good question, Basani. Certainly something that I've seen is companies who are headquartered outside of Africa, they maybe make assumptions about what legislation is going to be relevant to them throughout the investment, and particularly when it comes to things like the supply chain and those social risks that I mentioned earlier. So I always recommend clients to take local legal advice, specifically around labor risks and labor rights, because they sound like such obvious things, but we have seen companies really just not understand that they need to comply, or that they need to make sure that their supply chain is complying with basic requirements around minimum age for certain types of work, or even minimum wage payments. So these sounds like really kind of basic fundamental things, but if you don't know and you don't ask the right questions, you can just easily fall foul.
Yeah, absolutely. And Sean, you look at things in a different kind of way, maybe led primarily by the reputational and integrity concerns that your clients are facing. What's top of mind when they're thinking around, how they navigate some of these issues, especially from a regulatory point of view?
Yeah, absolutely. Well, I actually see there's a question about asking, how does one prevent getting involved with investors or others that can impact your reputation? And one part of it is reputation, but another part obviously is regulations and legislation. for the stuff that I'm covering, a lot of it's, like we said, anti-bribery, anti-money laundering, terrorist financing, and most, I mean, the big two are obviously the FCPA and the UK Bribery Act, which most people know. Speaking with a lot of mid-cap and small-cap PE companies, they are very South Africa focused, invest in South Africa, everything's in South Africa, and they say it's not really necessary for us, we're not really worried about it. But I think, it's also important to know that, I mean, we have our own anti-bribery, anti-corruption, the Prevention and Combating of Corrupt Activities Act, which is fully named PRECA, which is 2004 legislation. And that imposes, there's a statutory reporting obligation where there are suspicions of an offense, such as bribery, corruption, or fraud. So we do have something here in South Africa, and I don't think it's very well known. One of the reasons might be that it doesn't have the teeth of the UK Bribery Act or the FCPA. There's no duty to investigate. If it is found, you have to report it, but there's no duty to investigate it. And unfortunately, at the moment, it's probably unlikely that that the government's going to put it up any further. But still, what South Africa has, and going back to the integrity reputation side, is we have a very strong civil society. So there's Amu Bungane from Daily Maverick, Corruption Watch. There's a lot of civil society groups that actually do actively investigate these corruption allegations and take a very active role in finding it and then publishing it. So even if you think you're fine, nothing's going to happen, FCPA won't touch you, there are still there's a very good risk that if you don't know who you're dealing with, and they end up being corrupt, they end up being, might be bribes paid, you can find yourself in hot water in the media. And if the media gets and they pick up on it, there's a very good chance that SAPs or the Hawks might then also take an interest in it. So I don't think no one's ever too small to not be affected by these risks. And I think if I could just maybe answer this question as well, we shouldn't take too long, just looking at, how can you prevent yourself from getting into this situation? There's other gaps in the DD process or specific red flags that are missed. I think that last sentence kind of hits the nail on the head, that if there are gaps in the DD process or if there are specific red flags that are missed, that's where there are issues. And I was just thinking about this when I saw it and thinking, how would I answer? And as someone who's ran a very small firm, worked for a mid-sized firm and now a large-sized firm, and did subcontracting for a lot of the other big players, how do you prevent getting involved with these investors or people that might impact your reputation, is making sure that whoever does your due diligence and is advising you has very good intelligence, has very good source networks, very good public records research. I think it's not ever given the credit it is, because you can find a lot if you go into the deep web, not so much the dark web, but the deep web. There is a lot of information out there that's not available just off index sites. And then working on that with having a very good source network. I don't know, Busani, you might have some comments on that, but the only thing I can think is, how do you prevent getting involved with bad people? It's just making sure you have good intelligence.
Yeah, absolutely. Sean, there's no substitute for, that extra time that you can spend doing your homework and making sure that you've got, real you're doing business with, how they come to the table, and what baggage they bring. It's one of those things where I think for a lot of our clients, it's something that you can think about and maybe not act on, because, the chances that something goes wrong, which is all well and fine until something goes wrong. And then you are, find yourself on the front page of, the latest Amopagane reporting. So yeah, it's one of those steps that definitely needs to be taken. And, I think the way you described it, Sean, I think is quite clear that reputational risks really fall quite squarely, within the broad operational challenges that, you need to consider when you are investing, not just in the ICT space, but in any new counterparty relationship. Pivoting then maybe a bit more towards other operational risks. And Sean, I'm going to come back to you because, I think you may, you are obviously living in interesting times, as all of us are, and we can't have this type of conversation without talking around the impact of something like COVID on the broader operational challenges that we're facing. I'd be really interested to know, what do you think the impact of the pandemic has been, and what does it mean for how some of these operational challenges are navigated?
Yeah, I mean, I look forward to the day when COVID-19 does not ever come up on any webinars. Look forward to the day we don't have to have webinars. Actually, we can do this in person. That would be amazing. But at the moment we have this, and I think the pandemic and the associated lockdowns, I mean, they've really exacerbated these operational challenges. Marissa spoke about them, and the pandemic only made them worse. I think where I went really bad is where the biggest disruption was on global supply chain. You just had, you had a lot of suppliers that because of the lockdown, they weren't around, they went bust, or there were changes, they were forced to switch contractors very quickly to try and get their, whatever, be it inventory, be it food, be it PPE for COVID. But the supply chain, the global supply chain, was really disrupted by the pandemic and by the lockdowns. And I think that opened up a huge scope for companies to basically a new range. I guess it wouldn't be a new range of risks, but it became much more prevalent. Because there was a limited scope to actually then look at your suppliers if there was a change. Because of the lockdowns, you couldn't get boots on the ground, you couldn't verify the company, you couldn't verify ownership. So there were a lot of fraudsters that took advantage, starting up companies, bidding on tenders, and basically using the uncertainty of COVID-19 to their advantage. I mean, we saw here, particularly for PPE, not just in South Africa, but around the world, there were a lot of people who started up PPE companies and said, we're going to sell PPE. And people would buy it, but there was no kind of looking, but where is this from? Who is this company? Have they ever done this before? And where are their supplies from? There was just this kind of general, right at the beginning at least, maybe a general hysteria and a rush towards, like, we have to buy it. Yes, this is a good price. Let's just do it. And I think it was a good lesson for everyone to just kind of take a breath and look back and actually look at what you're about to do and really get certainty on things. I think particularly in the ICT sector, where, I mean, the finished equipment that you might have, be it a cell phone, a tower, or a computer, or a fiber line, or whatever it might be, that's going to feature parts from all around the world and from several different countries. So I think it's really important that before you leap into it and just say, well, must do it, it's important that there's some sort of diligence on your suppliers to make sure there's compliance with relevant legislation, regulations, make sure you know who you're dealing with, and that you don't get burned.
Yeah, absolutely. Very, very good points that you've made there. I mean, Catherine, what do you think? I mean, how has something like the pandemic impacted on, how you are considering, or rather assisting clients consider the risks that they're facing, and how how they can navigate them in these, crazy times?
Yeah, absolutely. I mean, everything that Sean's just mentioned about those sort of supply chain challenges, that extends all the way down to the workers who are right at the end of that supply chain. So look, technology for us and the people who are dialed into this right now, it enabled us to keep doing what we do. We kept working through COVID for most of us, but the pandemic had a devastating effect on some of the most vulnerable categories of workers, and those are the ones who are low wage or low skill. And if you think about the disruptions where, for example, US headquartered tech companies put projects on hold, and if you're a sort of a contract laborer on construction projects and suddenly there's no work for you to do, you're out of a job, you're not getting paid. Contrast that to other companies who were struggling to keep up with demand for their products or their services during the pandemic, like PPE, for example. In some cases, unfortunately, those companies responded to that increased demand by throwing labor standards out of the window. And all of a sudden, it didn't matter how they treated their workers; they just needed to get the products out the door. And this has been recognized by the ILO, so the International Labour Organization, as an impact that's resulted from COVID. So they published a report a year ago that said that they recognize that kind of the market conditions that were created by COVID have definitely led to an increase in the risks of things like forced labor and child labor. So you can't ignore that. I think if you are any company with any supply chain has to be thinking about, okay, maybe things were fine before COVID, we can't assume they're fine now. We need to check, we need to see that everything's okay, that we're still compliant and we're not creating negative impacts.
Absolutely. I think that makes a lot of sense. I think the labor issue is, very, very important, especially, when you're looking at some of the environments in which, some of the labor conditions that exist on the continent, and, quite frankly, some of the lax standards that are applied, in different markets. And I think this kind of even falls into some of the broader ESG considerations, which I think are becoming more and more topical and top of mind for a lot of our investor clients. It would be a good idea, I think, maybe to just have that then as something that, we can all have we'll give some thought to. ESG is increasingly, becoming of importance when we're considering the risk profile of investments. And it'd be interesting to get a view from the attendees. And I think we can put up a poll here. To what extent do ESG considerations factor into the risk profile, of potential ICT investments? If you can just, give it a minute, have some thought about, recent investments that you've worked on or are considering, and, give us an idea about how much this is, a part of your considerations. While we do that, I think we, as a panel, I think it'd be great to get some view of how this issue is manifesting for some of our clients and how they're trying to navigate some of these ESG issues. Sean, you do some work in this ESG space, and you have, assisted some clients in what I think one might consider an ESG-focused due diligence exercise. It'd be great to understand from you how you see these ESG risks manifesting, and how they are playing into, how your clients are thinking around them and mitigating them.
I'm actually really intrigued to see the results of this poll when it comes up. So I'll wait and see with bated breath. But I think one thing that we've really noticed, that ESG has become a much bigger concern. We'll see. I think there was a recent survey. It's gone. There we go.
Oh, there we go.
Okay, so that's interesting. Equal importance seems to be 50%. No one put it the dominant consideration.
Yeah, and interesting that for some hardly considered. Yeah, it's interesting because it is such a, in some ways it's an old topic, and in other ways it's a very new topic. Depending on the country in which you're operating and the regulatory considerations that you have. So it's really interesting to see such a broad range of answers around this.
Yeah.
But Sean,
I think if I was a betting man, I think that will probably change in the future, where I think you'll see a lot more, especially, everyone here is kind of PE and venture capital, but I think, as we were saying before about funding, I think ESG will become a much bigger thing, especially the S part is going to become a much bigger part of investing. There was a recent survey, I think it was mining CEOs were asked to basically rank their biggest risks. And the biggest one this year was ESG, was the impact of ESG, where 10 years ago, it wouldn't even be in the ballgame. And now that's number one, more than anything, was the ESG risk. So, the work that we do in ESG is very broad. It's transactional support, community engagement planning, responsible security, social risk and compliance monitoring, to name a couple of things. But it's all very broad and very bespoke. So for our PE clients, we're often asked to conduct an ESG due diligence on maybe prospective partners, on investments, on third parties. And like I said, all of these scopes are very tailored, very bespoke to account for the issues of, or to account for the different industry, the different geographies, wherever the project's happening. As far as kind of what we do with the due diligence, obviously with a kind of a normal due diligence or typical due diligence, we focus on concerns like the ultimate beneficial owner, political links, adverse media. And then our ESG due diligence really expands on these into questions away from the governance, obviously still part of it, but into environmental and social impacts. And again, these are all bespoke, depends on what the sector is, what the company is, and what they were looking to do. So we don't really have kind of I think the important thing to know is it's not a tick box. We don't just go through and like, do you have this? Check. Do you have this? Check. The way that it's done is depending on what the requirement is, depending on what the investment, the sector, the country. From there, we go through to make sure that that all the bases are covered, and we will find innovative ways to do that. We do draw guidance from a number of different international standards and best practice frameworks. So there's the SASB, which we're a member of, the IFC performance standards. So we look at those when we're actually, and kind of use those as a guideline when we're going through an ESG due diligence. I think in regards to the tech industry, the questions we might be looking at as an example, we might be looking whether the company has sufficient policies in place to address data privacy. If it's maybe a data center or something like that, are they using renewable energy? How are they getting their energy down? And I think a very important one is also, how are the workers treated? And Catherine's talked about this quite a bit, and it is her area of expertise, but it's very important. Are there labor strikes at the company? Are there labor strikes at the suppliers? And I think that final question is actually very important. Like I said, it's the S part of it, the social part of it, is becoming very important. Funders, government, civil society, I think they want to see that investors and companies are not only doing no harm, but are actively helping to uplift areas where they're operating. So I think despite the current poll, I bet you in a couple of years, I would put money on it. I'm sure there's some gamblers that will change in the next couple of years.
I agree with you. And if I was a betting man, I think I'd put my money where you are, where you will. That's very interesting. And okay, so it'd be good actually maybe to come back to Catherine, because you kind of kicked us off on talking around some of the labor and human rights issues. She wants to describe this process of conducting, pre-transactional due diligence and ESG risks. What's your comment about the social environmental risks that might be present, once an asset is operational?
Yeah, this is all about unintended consequences. There's absolutely no doubt that tech solutions are required for some of Africa's most pressing social and environmental challenges, whether it's safe drinking water, access to power, there's many you can choose from. But what's also clear is that there are unintended negative impacts that are arising from some of these technical solutions. So take, for example, mining of cobalt and other minerals in Africa, and those are used in rechargeable lithium-ion batteries that go into our phones and our laptops and our cars. It's known that that industry has thousands of child laborers. It's hazardous work. It is absolutely not what we want children to be doing, but unfortunately it's very common. Separate issue, you've got renewable energy companies and a recent study that found only 50% had human rights policies. So, there's some big gaps here around companies that are getting involved in tech solutions, but not necessarily thinking about the impacts that they may have. And they should, because it's not just kind of the ethical issues, it's also the impact that it can, if you kind of have an issue with the local community because you're developing tech infrastructure, and we've talked about cables being laid and things like that, that can quickly escalate to a security problem. And we talk a lot to our clients about this overlap between environmental and social risks and security risks. And the solution is not always to build a bigger wall, put another fence in, add a few more guards. Sometimes you need to look at underlying problems and community relations and social issues. For example, we had an organization that was investing in fiber optic business in Africa. They were concerned about security issues and community reaction. And we helped to work with them because they recognized the reputational risk if they sort of did have issues with the local community and lose that social license to operate. And the security risks as well, because you could have people being attacked as a result of that kind of poor community engagement. So there's a lot to think about there. And I think also, we talk about bringing some tech solutions into parts of Africa that don't have great infrastructure. you need to make sure that the local communities also see the benefit, whether that's through job creation or whether it's through increased access to power and things like that. If you don't, you're going to see grievances, you're going to see local civil unrest and things like that. So there's a lot going on as well.
Yeah, it definitely sounds like it, Catherine. Wow, I feel we've covered a lot of ground here, and so it's been really, really interesting. I don't want to, stop the talk without getting your key takeaways that, if anyone was listening to this this conversation, that they say, okay, you know what, whatever happens, I need to remember this. So if you don't mind, Marissa, perhaps I could just come to you and perhaps get your, key takeaway about what you think the future of ICT investment in Africa looks like, and the key considerations that you have in mind and those that you're discussing with your clients at the moment.
Sure. So I think it's going to continue to be a hot topic. I don't think this is kind of just a fad that's going to die down in a few years. It's not something that people are just talking about. It's something that's very real. There are very real opportunities, and they really shouldn't be ignored. But the other thing is that, of course, the barriers and the risks are equally as real and should also not be ignored. So I think it's one of those typical things of, it's high risk, but it's high reward, which is really kind of the story for a lot of sectors in many sub-Saharan African countries. I think, if you're a company looking to invest in ICT infrastructure or into the sector more generally, you can really tap into these opportunities now because, like I mentioned right at the beginning of this presentation, it's a really underserved market. And so that means that there's major potential that you can really tap into. And, we've spoken a lot about how, COVID has had a really detrimental effect in, of course, so many ways. But I think the one perhaps good thing to have come out of it is that it's really kind of accelerated maybe interest into, different kind of tech industries and parts of ICT that, maybe governments had identified before, but there was no kind of sense of urgency to really get into them. And, I think what we're seeing the most, or, really over the past 18 months, is just the kind of opportunities that have proliferated across biotechnology and e-health services, like telemedicine and digital healthcare applications. Those have become really, really important. And that kind of importance is not going to go away anytime soon, which means that those opportunities are going to stay there. And actually, investment in the sector has really, really kind of boomed, really. It reached, I think it was almost $90 million in the first half of 2020, which was more than triple the amount that was invested in the region the previous year. So it's probably just 1 year. And again, like I said, that's not going to die down. One really cool example, I think, that investors could look at is actually a Nigerian biotech startup. It's called 54Gene. So it launched in April 2020, the outbreak of the pandemic. And basically it's a certified provider of COVID-19 testing in Nigeria. It really filled a kind of gap in the market. It didn't have those kind of capabilities to a wide extent before that. And actually this has really just grown from strength to strength. It's now partnered with a US genetic variation analysis system firm called Illumina since the end of 2020. And what it's doing now is it's building a genomics facility in Nigeria's commercial capital, Lagos, which allows it, to do more kind of in-depth scientific research on viruses. And I think something like that is really, really exciting.
Totally agree with you, Marissa. And a great example there that you brought with that genomics facility in Nigeria. Surely, I love a good case study. There must be something that springs to mind when you're thinking, when I'm talking to my clients, these are the do's and don'ts, and here's a good example of that. Is there anything that you could comment on and experience that you may have had that kind of really illustrates the type of homework that needs to be done to navigate some of these risks?
I do have one. I'm conscious of time, and I was going to, I had an interesting one from when I first started doing this many years ago, but I'm conscious, if I could actually, I know there was a question on here, which I think they've heard me drone on about the need for due diligence. They know it, and they know that we're the ones. But I'm quite interested, actually, I saw this one about the real and perceived risk to investing in Africa from international investors, and any advice on how to sell the African investment narrative to investors outside the continent. And it made me think, because you might notice my accent's a bit weird. So I'm originally from Canada, born and raised. I've spent the last 15 years living, traveling, and working around the continent. And I think what's interesting is that it's only then that you really get to know the massive amount of opportunity that's available here. And unfortunately, whenever I hear from people in Canada or from America or Europe, it's all bad stuff. So they heard about the riots in Gauteng and KZN, but they didn't hear anything about, as we spoke of before, but they were all on fiber, and they're not. They're not on fiber internet. They're still on broadband. They don't have that opportunity. So they only hear, unfortunately, about the really, when something goes wrong, which is a dreadful thing, and hopefully the media does fix that. But I think, if you really wanted to kind of sell the African investment narrative, I think it's got to be done where we have to bring people here. We have to increase tourism. We have to increase trade shows, and ideally, once all the pandemic stuff is over, we can have it where we can have American investors, for example, who don't know much, Canadian investors, come down and actually see that there is a massive amount of potential in the continent.
If I can just add to that in terms of kind of how to sell the African narrative, is I really think, that there are certain companies abroad, particularly in the West, that are just very risk averse. And there's not much you can really do to change that. There are risky markets all over the world, and sometimes even in a more developed market, a sector that is particularly new obviously carries risks, because there's been no kind of precedent set for anything. So, I think, it's just sort of being aware that there's certain companies, that just really don't want to take those kinds of risks, and those are not the ones that are going to be looking to come to, African countries, and really wanting to put down long-term investments there. I think the other really important thing is that I think sometimes people are scared off, as Sean said, by just hearing about so many risks. I think it's very important to be very honest and to say these are the risks. This is kind of your worst case scenario, and I think, but this is also your best case scenario. And I think when you've presented that to potential investors, and they have a good idea of what could go wrong, but also what could go really well, and then I think that they are allowed to put in place, business plans that say, okay, if we do get to our worst case scenario, this is what we can do. We're not going to be caught off guard, because I think for investors, sometimes it's not the risks that are scary, because you can mitigate most things, but what's really scary is being caught off guard.
Yeah, there needs to be context, but like you said, when you're talking to an investor, there needs to be context, not just there's corruption. There's corruption everywhere. There needs to be context behind everything to actually, I think, explain to a lot of international investors.
I'm going to jump in with the final comment, if I may.
No, go on. Yeah.
I think I've talked a lot about risks and social risks, but there are huge opportunities here for companies as well to have positive social impacts. And I would urge everybody to look at something called benefit sharing. The IFC are really backing this as a concept, and basically it means that you are not just looking to mitigate negative impacts, but you're actually proactively trying to introduce positive impacts to local communities. And I think there are huge opportunities for that in Africa.
Yeah, absolutely. Totally agree. It's amazing how fast time goes. Let me just see, because I do make sure that we address the questions that came in. We do have a question here where someone has asked about some of the gray areas in regulation of policy and, the impact that may have, and they've cited the recent Burger King investment. Marissa, South Africa, politics, regulation, this is your bag. What do you think? Can you comment on these gray areas and their impact?
So there absolutely can be gray areas. And I think with the ICT sector, that risk is particularly heightened just because the sector is relatively new. And I think that, while you may have governments, forming all of these committees and speaking about new policies and new legislation, there then can be a gap in kind of how these are implemented. A lot of the time you might find that there's one law, but it can technically be enforced by 3 separate entities and things like that. And, we do see this happen a lot with kind of new new kind of legislation and, you know, in many, many countries. I think that's when it's really important to, I can't remember if it was Sean or Catherine who mentioned it, but at one point in this webinar, we spoke about the importance of having a local partner and not assuming any knowledge, even if it's the most basic thing. And what it's really good to do is to have a kind of trusted partner. So it's not just in terms of kind of, you know, getting a once-off assessment. If it's possible to sort of look at things in phases and to say, okay, you know, we're looking at a pre-transaction. What do we need to know? Okay, you know, you've got your basic due diligence, who are your partners, but also what's the kind of political climate behind this? And when I say the political climate, I'm not talking about the very top, but I'm saying, you know, who's the minister in charge of these sectors? Is there any kind of idea that, you know, policy reform might be slow, you know, is there any kind of precedent for bills to be repealed really quickly or new ones to come into effect? You know, all of that kind of context is very, very important to know. So I think gray areas you can't necessarily get around, but I think if you are constantly, I think first, if you're aware of the context and the environment in which you're operating, is it less stable in terms of policy implementation, or are there, you know, too many committees kind of trying to manage this? Then, you know, you might think, okay, there's too much going on here. It might not be, you know, it might be too risky, or we might take a step back, or we might do something smaller first. But then I think it's really just making sure that, you know, you don't just have a once-off assessment. Like I said, you know, maybe every 3 months you relook and you say, okay, we've got a trusted advisor. We're going to get them to update that report that they gave us so that we can make sure that we're staying ahead of any potential changes that are coming in.
Great. That's, I hope that addressed the question. I certainly am more enlightened after that. That's great. Well, look, I think we have maybe just a few more minutes. Are there any other questions from the attendees that spring to mind, or perhaps any you know, personal experiences that you've had, you know, in making investments in the ICT space that, you know, might be illustrative of some of the challenges that you are facing, and maybe that some of your peers are also engaging in. I just want to open the floor to anyone to make a comment on that. No? Okay. Okay, maybe there's comment on, yeah, maybe, yes, someone has asked about how the macroeconomic environment might impact on investments in the ICT space. Could I go to Marissa? You have that look on your face of you have the answer.
Sure, I'm happy to take it. Actually, I think this is a pretty good question, because we've spoken a lot about political risks, social risks, you know, all kind of operational challenges, the need for due diligence. But actually, we didn't really speak much about macroeconomic instability, which is, you know, quite a big topic when you're working in sub-Saharan Africa. I mean, with the exception of South Africa, which, you know, has developed financial markets that are just as deep as those in developed countries, it's not really the same for the rest of the region. I think for investors, what I would really point out there is you have to understand the currency regime of the country. And, you know, this differs from country to country. So, you know, what might be the case in Angola is not going to be, you know, the case in Ethiopia, for example. Some countries have very tight capital controls. This really kind of impacts, you know, how you're sort of able to pay staff on the ground. Some countries also have very unstable currency regimes. So for example, if the local currency is quite weak, they might implement a peg, you know, where it's sold at a certain price to the US dollars, they might remove that. Some countries are quite stable with this, some countries are quite liberalized, but other countries are quite rigid. And I think if you are an investor and you're kind of looking at a long-term project, this is also a risk to watch out for. It's important to know what the currency regime is, how sort of severe macroeconomic instability is, but it's also important to keep updated with it all of the time and to know, are you in an environment where this can fluctuate drastically and really impact your investment and essentially what it's worth? Are there ways to sort of guard against that and to maybe guard against rising inflation? You've also got to look at things like foreign currency shortages, which Ethiopia, Nigeria, Angola as well, this can be quite acute. You know, so this can sort of impact your ability to, you know, pay the people on the ground and things like that. So macroeconomic instability, definitely want to take into account, but also another risk that has to be consistently monitored. And, you know, just again, a note on South Africa, I said it's got the deepest financial markets in the region, but, you know, even some investors find it a difficult environment to operate in, obviously for many other reasons, but because of tight capital controls. So there's many, many things to consider in this, but definitely not one that should be ignored when you're investing in the ICT sector or really in any other kind of sector.
Brilliant. Thank you, Marissa. Well, I don't see any more questions here. Just a final ask if anyone has any questions before we wrap up. Now is your opportunity. Yeah, we have one here. So yes, the question is, how do tech firms manage different risks, or rather, how do they manage risks in different African countries? This one, Catherine, this seems right up your alley. What do you think?
Yeah, so there's a client that I've been working with, they have a global program for managing modern slavery risks and fair labor standards across all their infrastructure. And they have new builds of data centers. They also have their own sort of office presence in lots of different African countries. And one thing that we've worked with them on is understanding and recognizing the different risks in different countries. You cannot just kind of come up with a global program that you devise in the US and say this is going to work everywhere. It doesn't work. You need to look at the specific risks in each country. And, you know, for example, on labor risks, some countries have a real reliance on casual or temporary labor. Others have a reliance on migrant labor. So there's lots of different aspects that need to be taken into consideration, and I would really recommend companies to look into the different features and different contexts in different African countries.
Brilliant, yeah, Catherine. And I think that, yeah, it's critical to have those kind of considerations depending on which markets you're going into. Great. I don't see any more questions, so I think we can probably wrap it up here. Unfortunately, we lost one of our colleagues, Sean, who I'm sure has been a victim of some type of load shedding, but I hope he's all right. But otherwise, it's been fantastic speaking to everyone. I hope you found this chat to be informative. If there are the questions that you couldn't ask now, but you wanna still get a view on, feel free to message or email either ourselves directly or SAVCA, and we will do our best to get back to you. Other than that, I think I can pass back to the SAVCA team to close us off.
Thank you so much, Basani, and to your team for doing this webinar today. As Basani mentioned, if you have any questions, please feel free to reach out to us and we will put you in touch. And we will also make this recording of the webinar available after the webinar if you want to watch it again, or if you want to share it with a colleague or someone who you think would find it relevant. So thank you so much for joining us today. Please keep an eye on your emails. You will receive your CPD certificate via email. So enjoy the rest of your evening. Thank you.